Hey everyone, welcome back. My name is Levi Woods. This is Drawbridge Finance. It is March 4th, and hope you are having an awesome day. Obviously, the markets are down a little bit today. Not as crazy as it could have been, but we definitely have seen some movement this last little while. So if you're a trader and you're like me and you're watching the markets all the time, you know we've had a kind of tumultuous week, a little bit of whippiness, and we're going to get into that. We're going to take a look at what you want to look at. So this is my public stream. If you have any questions about anything, just let me know in the chat on YouTube and I will get to the questions. This is a live, unscripted Tuesday afternoon, which is fantastic. It's kind of my favorite time of the week because I get to just hang out with you. We get to talk about options and look at some ranges of things. We're going to get into it. I see Kevin's online already. Thanks so much for joining. And everybody just let me know where you're watching from. And if somebody could let me know my audio is working too, that's always fantastic because I am a one-man show here. Let's get into what's going on in the market. On my screen here, we're looking at trading view. I've got, off to a good start. I've got the S&P 500 off to the right. This is the 1 minute chart. We've got the 30-minute chart here. This is the volatility index showing on the left, and then the NASDAQ 30-minute chart here on the bottom. Now, the reason I have the VIX, the volatility index up, and I'm showing this is the 1 minute, which what I wanted to just analyze this a little bit because right this morning before market open, we actually saw the VIX hit its high. Now the VIX is interesting. Hey, John says happy Tuesday. Jackson says I made it on time. That means he won't have any technical issues. I don't even have IBKR loaded up today. Let's not talk about it. Let's not talk about IBKR. And Kevin says you can hear me. Thank you so much. Appreciate it. It's always good to see everybody back. And yeah, or get in early with your tickers. If you've got a symbol you want to take a look at, we're going to look at a whole bunch of things today. But mostly I want to look at the VIX. And obviously there's the tariffs going on. That's one of the things that's happening. Tariffs went in today against Canada and other parts of the world from the US. I'm Canadian, so this is all talk of the town. What is this going to do? Overall, tariffs and tariff wars are not typically very good for the economy in general. In the past, we've seen 20% drawdowns from tariff wars. Not a super common thing to happen, but it is part of the political scene right now, so it's what we're dealing with. Now, the reason that I bring up VIX, it's the volatility index, and this is a scale that measures at a percentage. So this is the expected percentage move looking at 1 day out or 1 year out from now based on the SPX. So that's what the volatility index is, VIX, a volatility of the S&P 500 index. So as of this morning, expecting a 26% move. Now this could be the up or down. And the nice thing about VIX is that it actually mean reverts. Usually when there's a fear in the market, then the fear goes away eventually. We will know the outcome of all of this tariff implications, and eventually the fear of the tariffs will recede and will go down and become less. When volatility is high, this is typically when we want to look at putting on things like iron condors, strangles, straddles, things that take advantage of high IV and that have volatility risk. When we do this, we get paid for those. One of the things that we can see is it's already declining. Now, where does it end up? Let's take a look at let's just look at a 1 day chart. So we look at daily candles, and if I pull up the VIX here, last August, we saw this massive spike. We rarely see these massive spikes. Typically, we see them when there's a move. So this spike in the 60s happened during the COVID crash. And we can see that after that giant spike, it came down. Volatility stayed relatively high for most of 2020. This was a pretty unusual year. But if you look back and if you've been trading, I've been trading options since 2014. So we know what happens in periods of times like 2017. If we look just at this area of the chart, we know that being a volatility trader or being a short premium seller in this time frame was not very good. What we actually like to do is trade volatility or collect premium when the volatility is higher than this line. There's tons of option traders that made a huge amount of money in 2020 and into 2021, And you can see one of the common things here in that particular time frame was that the volatility was high. 2022, we had high volatility, but we also had the market going down. So if people were bullish in high volatility in this time frame, in this 2 years, they made a lot of money. If they would continue to be bullish in 2022, they actually lost quite a bit of money because there was still volatility was high, but a lot of people were using strategies that had worked in the bull market portion and had not been able to switch strategies into the bear market. Now in 2024, we had a relatively low volatility, and now since the later part of this, let's clear off some of that. The latter part of the year, we're all of a sudden seeing these volatility spikes. And let me just zoom in here so we can see this area. So I have this red line marked on here. That's at the 17. VIX average is somewhere between 17 and 18. And typically, if we can put on trades when the volatility is above this line, this will mean revert. The fear will go away and the volatility will decrease. So we want to put on plays that take advantage of high IV when the volatility is high, and we want to put on low volatility plays when the volatility is low. So for people in my service, they know like this last little while, I've been putting on a ton of diagonals. And then today, all of a sudden, I'm putting on iron condors and looking at collecting premium, rolling premium out. It's a very lucrative time. I believe this is already past. So if we look at this year, if we just were to zoom in only to this recent time frame, this has been the buildup to this tariff event, which happened today, and we saw that spike, and we can see we're already retracing on the daily candle. And that was why I showed you that 1 minute chart on the in this quad view. Sure, let's leave there. And so what is happening is we're seeing this volatility on the 1 minute come down, staggering throughout the day. And again, this is just because of the function of what it is. Hey, John Blake says, I'm so sad I don't have more money to sell more premium. And Mike says, happy Tuesday. John, I am completely with you. You know, I've got some long positions that were kind of dragging my account down, and I was, you know, you always think that you've got enough reserved. You always are looking at these risk profiles and looking for that volatility expansion. And sometimes the volatility expansion doesn't quite make up for the losses in a long delta position. So I wish I had been a little more aggressive in adjusting my shorts. I actually didn't think we were going to have this much of a drawdown. When we are, you know, in these days, I wish I had more. We all wish we had more capital because this is the day to take advantage of it. And the condors that I put on this morning have already made money, which is awesome. That's what I like to see. But we couldn't just you can't just load up all at once because you just never know. Let's take a look at SPX. I want to go back to this 1 day chart and kind of, you know, try to stay on the wider time frame. And the reason I want to do that is because I want to show you, let's just draw a line on here. I just want to show you these lower lows. Like if we were to mark this as a lower low, and this is going back quite a ways. This is going back to October of 2023. So if we're to mark that here, was this a technical level? It actually was. I don't have them on here, but this bounce happened right at the 200-day moving average, which is pretty interesting. I don't have that chart on here, but for those of you who do, if you're tracking moving averages like I typically do, this bounce was right at the 200-day moving average. Now, we also saw what's called the death cross occur today. So if you're looking at the 20-day and 50-day EMAs, then that has crossed down. But this candle, to me, this looks like a very, very bullish candle when we see this long wick to the downside and then the cluster of trading that's happening up near the top. Now let's look at the visible range volume profile and take a look at how much volume has been traded here over the past little while. So if we look back just this year, so going from December to now, these profit profiles, or sorry, bars on the right hand side show where the buying and selling have been. Now we actually had a large volume of buying and selling at the 59.50 level, and we're down here in this range where there has been almost no buying and selling. Now the prices haven't been down there, which is part of why there's been little volume, but it's no surprise that we're keeping up in these nodes. If we've seen this action, I would assume that in these low volume areas, we will move back up relatively quickly. Point of control is actually above 6,000 level. So these daily candles, which are nice and long, kind of match the length of this one. If we close high today, there's a really good chance that we could pull another large candle like this, just like we saw 2 days ago, and potentially even higher. We might just rip straight up. Now, of course, we could easily break down as well. So it's hard. It's hard in these positions. We kind of have to take a direction. I am just looking at my daily decay. Am I positioned in a way that I am going to make some money either way? And that's what we're doing. Thanks, John. Appreciate that little comment. Let's look at NQ rating. We're trading right now at 20,559, and the same sort of thing here. If we're looking at the point of control, I'm really looking at the amount of volume that we're seeing on this side, and that point of control being way up here near the averages. If again, same sort of hammer candle forming on the daily down here. Long tail on this wick, small little cluster of trading at the bottom of the value range. Not a huge amount of trading volume going on at these levels. So these moves can be quick up to where these large bars are. In NQ, the move might be not quick all the way up to 21,570, but we could definitely see some very fast moves in this area until we get into these larger bars. And of course, we have to look at it on different time frames as well. So if I zoom in, it'll adjust those time frames, and we can see again, same sort of indication that we would have a relatively quick move up to this level, and then it would start to have some consolidation based on the volume. That's one of the things we're looking at. John's asking how wide were my condors. My condors, I did some SPX condors this morning, and I did them like at, I want to say just under the 15 delta, 16 delta. I put on, first thing this morning, SPX was at 5,800, and I did some short 5,500s and some short 6120 calls, and I did them very narrow, just small wings, just $10 wide wings. Collected $2.70 for that, so it's a 27% return on capital if the stock or SPX stays between 5,500 and 6,120 for March 31st was the condors that I put on. So if we were to mark those levels on here, if we were to look at SPX, how wide were they visually? I had the 5,500 shorts, which are right here. So that green line, and then the 6120, which is right around there. So almost at the top of the range. That's how wide my condors were. And I placed those, the market was trading around the same value today, but the VIX was higher. They couldn't get quite as much money for them now, but I got $2.70 for $10 wide condors that are in that range. That is a very nice wide condor. The reason I start my condors pretty wide is if we did see some continuation to the downside, it'd be very easy for me to adjust the one side down and kind of move into, slide the position tighter, so to speak. Strangles function like that as well. There's two ways to do it. We either sell the straddle or we start tight and then move to one side or the other. I'm a fan of starting a little bit wider and then adjusting the untested side in for more credit. If we get it to the downside, there's usually more increased volatility. It's not as much to get the side from the calls, but we can do that. In big moves, what I might do is I might adjust some of the condors down and then buy some put spreads to give myself a little profit tent to kind of protect that. There's not a lot we can do with condors in general for defense. So generally we want to put them on when the volatility is high and then let them ride. I don't really like to take mine off too early either. I know there's lots of discussion about, you know, reducing that risk, but I tend to hold mine a little bit longer and take a little bit shorter duration. Trading Kingdom, Levi, I love the calendars that we've been doing this year. They've been very profitable. Thank you, Trading Kingdom. That appreciate that. Yeah, the calendars have been pretty good. I didn't even look at any calendars today because the volatility just spikes up. And with calendars, what we want is we want that movement to one side or the other. And, you know, just trading these very, very small trades, they can work well in low IV. I don't love to place them in high IV. I've got a couple still on. We'll see how they play out over the next couple of days. If we get a nice sharp up move, that would be very nice for some of the positions I have on. But in high volatility, this is when I would consider playing naked if we have capital allocation for that. And then playing those really short duration, high IV, high theta decay, high gamma risk trades can just pump out a ton of money. So calendars to enter them aren't quite as good, but we'll see as the volatility compresses, I'll probably be putting some more on. And I've been enjoying kind of putting them on as double diagonals or double calendars and putting the saddle kind of flat and having a nice wide profit profile with those and layering on small trades because it's a good way to make more money. Yeah, John's asking, you thought would have put my call of the Iron Condor around 6,000. I typically, you know, I've been doing this a very long time. I tend to slightly skew to the call side, and so that I get a little bit of bullish. And the call from a delta perspective, my calls were, so I sold the 18 put and I sold the 12 delta call. So a little bit of skew, and that's pretty typical of me just in general to have a little bit of long delta. When we're still in a bullish market, you know, there's nothing showing us that we're going to break down. One of the things I posted in my Discord this morning was about the sector rotation. Let me see if I can pull up. I had it open earlier today. I'm sure it's still open. Maybe not. What I'm looking for, and you guys can do this yourself. Head over to like FinViz and just look at their heat map. And I'm gonna pull it up here for us. Just give me 1 second. I'll pull it up on screen, and then we'll take a look at kind of what's going on, because this morning, it's interesting actually, because it's changed quite a bit from this morning. This morning there was a huge amount of red, and there still is a bunch of red. Actually, I need to pull up the chart from this morning. Let me just pull it up here. And then we'll look at what it is now, because this kind of really paints the picture of today. So here's this morning. So this was a screen grab from this morning. And what we're seeing is the S&P 500, sorry, the S&P 500 is, it's a weighted index, right? Which means that there's a lot of sizing in some of these stocks. So if you're not familiar with how these heat maps work, you can instantly see how large some of these companies are, like Microsoft, Apple, Amazon, Google, Meta, Tesla, Walmart, Nvidia. These make up the bulk of the S&P 500. In fact, 34% of the S&P 500 is clustered in only 10 stocks. So when we look at what was going on this morning, Microsoft down 2%, Nvidia down 8%, Google down 2%, Amazon 3%, Apple minus 1.57%, Walmart 1.3%. One of the things that was happening is we could see that money flowing out of this portion of the market and into portions of the market like healthcare. Also behind me here, we saw this money flowing into utilities, beverages, things that real estate, things that are a little less volatile, so to speak, and have less exposure to the tech industry. Now, if we look at what's going on today or later today, this is only a couple hours old. This is information that's 4 hours difference. And we can see that that money flow has changed course. If we look at utilities, which was bright green this morning, and beverages, which was green, and real estate, which was green, and healthcare, which is green, all of that money flowed back into these stocks. We see that money coming back into almost all of them. What this is showing me, and this is my takeaway, my opinion of what is going on, is that there isn't a ton of money leaving the market. When we look at these heat maps, when we see how the money is moving around, we see the money moving rather than exiting. When we see a bull market or bear market, if there was a switch and we went truly bearish, there would be money pulling out of all of those sectors. There wouldn't be like a sector rotation where money is moving laterally as it is today. And we saw that this morning and back. And you know, hedge fund managers, people that are really active are making a lot of money on these trades. They're taking advantage of retail traders. So we have to kind of step back and say, what is the long game? How much do we expect to make? How do we keep our deltas neutral? How do we not panic? How do we just hold the line, make sure our profit profiles are appropriate? Today, one of the things that happened in my account, my theta went negative. You know, I have enough hedges on, I have enough like scoop on my profit profile that I was actually negative. So I needed to put on a few more trades to get that theta up. And I do that with those nice wide iron condors, knowing that if the market moves, I'm likely still inside that condor, and I have this upside profile on the outside wings. What does that look like? Let me show you what my account profile looked like this morning. It's pretty aggressive deltas, and again, this is something I shared with my group this morning. And just give me 1 second, I'll bring that up. You know, so we get to talk about like the market mechanics and things like that. So gotta clear all those awful things off there. This is what my profile looks like. Now, this is not very typical for me. Typical for the style of trading that I do, I have always maintained quite a large amount of downside risk, and I typically try to make a profit profile that looks like that. And that if you were asking me over the years, what does your volatility profile look like? It's typically this sort of setup. I maintained this setup in 2022, and I know the pain of the market dropping when we have too steep of a curve on this outside. So it's fine to have a nice profit tent down here, but if we were to get into real trouble with this market and we were going to see a sell-off, these are percentage numbers down here at the bottom, and this is based on the SPX. But if we were to see a percentage drop of more than 10%, if something really crazy was to happen, right now, I don't want to have a curve where I'm losing lots of money on that type of move. I want to have a curve that is making some money. So this morning when I opened, when I hold this type of position, and I don't do this very often, I am looking for a move in either direction, and I don't really care which. Now, if we drop, I'm not really making or losing much. You know, if we get like 0 to 4%, then I'm just kind of staying fairly even. What I really want in this market is to see a nice recovery, see the bull market continue. And that is just my present assumption. So trying to mitigate the losses and try to keep that potential for the upside Now, doing that doesn't really help on a day like today, you know, being leveraged in that way. Okay, let's take some questions. I would love to know if you have any particular stocks. Yeah, I could have, you know, John's asking about maybe making more premium by selling the condo around 6,000. It's just personal choice, you know, and this is where, you know, everybody trades a little bit differently. I have been burned enough times by up moves that I don't always want to stay, I don't want to stay completely neutral on those condors. And so I tend to just layer them on slightly skewed to the upside. And the reason I do that again is because if we were to look at the chart, we're just continuing to be in a bullish market. Now, if we saw huge retracement, like let's just say we were able to come down to like the 4,500 level or something, as you saw from my portfolio, I would actually be making money anyways. So it's nice to be an option trader in that way, where we can really pick and choose our battles. Like if this market decides to go up from here, great, I make some money. And if it decides to really tank, then I make some money. And if it just kind of trades sideways and choppy, then I don't make that much, but I'm not losing that much either. If that makes sense. Okay, I got 5 likes, which is fantastic. There's 22 people online. Let's, I'll run through the rest of these. Let's just look at the Russell. It has been hurt the most. One of the things that the Russell, that happens with the Russell index, I'm gonna actually remove this, this line. We've definitely broken through. So if we were to kind of reset where we're looking, are we going to be able to hold on the Russell? Are we going to hold this level? Was today the bottom, so to speak? We just don't know. The Russell has 2,000 stocks in it. There's lots of financials in here. Financials have done very well this year, and they also have a lot of risk. Now, today there was an announcement. I didn't read the full article, but I did see it pop up that the Fed is promising lower interest rates. Now, I would assume this has something to do with the tariffs, and this, we're talking about American stuff right now. You know, that should help the Russell overall. If we were to look at the index on if we were looking on the 1 minute, let's just change to 1 minute here. Let's just look at the 5-minute chart. I don't know exactly when that announcement came out, but today at 8:30 this morning, so this is 6:30, my chart is in Pacific Standard Time. So 6:30 was when the market opened. We saw the Russell coming down, and then we've just been absolutely straight up since 8:30 this morning. So 2.5 hours of a move to the upside. And that doesn't surprise me. If there are promises of lower interest rates moving forward, that definitely is going to affect the Russell in general. IWM right now down only percentage-wise, just down 0.29%. So SPX down 0.4%. Russell's actually down less than the S&P 500 right now, and NQ futures up 0.49%. Dow Jones down 0.8%. The VIX, as we said earlier when we talked about this, that this decline will continue to happen because the peak, I believe the peak was already this morning. We've had quite a bit of build up to it. We knew that this was coming, and we knew that today was the day. The announcements have been made, and this VIX is just dropping. So we'll see what happens. Mike Mueller, since some calls their losses as drawdowns, my IWM positions are now in bloodbaths. Yeah, IWM has not had a great year. I have some accounts that have a lot of exposure to TNA, which is a triple leveraged IWM. And I went to cash recently in some of those accounts. It's a little bit increased portion in cash. And I was wondering when to deploy, and I just don't know if today is the day. I probably, you know what, whenever I'm thinking that, I should probably just buy some. But I think the worst is behind us. If, you know, even in these big tech stocks, like if we were to look at Apple, this is on the 1 minute. Let's look at the daily. Oh, sorry, that's the weekly. Let's look at the daily. I didn't mean to click there. on the daily chart, you know, what is happening with these from a technical perspective? They look to be higher than their point of control, and they're definitely in a slight downtrend, but then they're also getting higher highs. You know, if we were to look at this, if I was to put this on, like here's that low from 2 days ago, and how do you even draw this on here? There's kind of the descending wedge if we just use the recent lows on the daily, and we're right in the middle of that. One thing that I like to do is just look at the fair market value. So to do that, I use quant programs, you know, basically that say, that is not what I was looking for. Let's pull up Apple here. Fair value 193, downside of 18%. So these are things to consider, and this is why the order flow has come out of some of these stocks, because most of the big caps are in a slightly overvalued territory. So what is going on? Can I not type today? Fair value, right near its fair value. We're talking at 388, fair value around 401 for Microsoft. So that gives us, this has definitely come down and has come into an area that is more around that fair value area. I think there's more algorithm trading happening as well. So when we were up here, you know, at 455, it was overvalued. But now, according to Investing Pro, it's actually undervalued. And this is an interesting thing. This is why, you know, I have always maintained that I like to use moving averages as a trading range. Well, more sophisticated traders use moving averages. They also use these volume weighted, like a VWAP, this is on here, the VWAP, the session VWAP is on here. Let me just zoom in, and if you're to do it on the let's say like a 5-minute chart, we would see that the VWAP is this kind of range in here, and we're trending up outside of that. And again, this is that money flow that we talked about earlier, where the money was flowing out of these tech stocks, and now it's flowing back in. Money just moving around. It's crazy. Where do you think the money is going to go next? Let's look at gold for a second. Do I have gold on here? Yeah, let's look at gold. 29.19. Very much, this is a 5-minute chart. Very much in the channel. Let's look at the dailies here. Gold has, and all commodities have been on kind of a run to the upside as this whole year. And not surprising, this is kind of like the business cycle, which we talked about a couple months ago. And you know, whether or not we were going to see a more of a bullish stance in silver and gold. Silver not doing quite as well, but still generally in an uptrend. We should talk about oil as well. These are 1-day candles that we're looking at. So I don't have a lot of indicators on here, you know, and my charts aren't too messy. I just want to look at where the flow is. Effectively, we want to see where the averages are. It's a very low point, so this is where we might look at it as a contrarian trader and put on credit put spreads. We know the volatility is high. We know that oil products tend to stay in a range. It's pretty typical. They stay in a range. They hit down to these lows and then they head back up. And this is where I like to, you know, be a little more directional than other traders and not stay completely neutral all the time. Or if I was to put on a condor on something like this, I might have a little bit more range to the call side than to the put side. So when I'm deciding how far, instead of just going similarly off of this red line, I might do, you know, like my low side here and then do my high side, my call side a little bit higher. And what that does is it gives it immediately a little bit of ability to move up into the center of the range when we're trading at the low side. Statistically, we should always be keeping delta neutral and saying if this is the midline, then, you know, where is our previous high, and then go equidistance down here. That would be completely delta neutral trading. I have found a slightly more success with having adjusted deltas and looking at the assumption that if oil is down, it's likely could go back up rather than just staying in mid-range. Depends on how you want to trade. Does that make sense? Type 1 in the chat if that makes sense. If you understand kind of skew to one side or the other based on moving averages versus just being delta neutral all the time. John Lindsay, I put on a 128, 135 NVIDIA call spread out 3 weeks. Do you think NVIDIA could break 128 if we continue another update? You know what? The NVIDIA's, I think that NVIDIA is still listed as overvalued. Let me pull up. You know, they can move quite a bit. Fair value is at 123.92. So again, this is kind of how I generally get a sense of which way I might want to go. And this correlates to how these charts work as well. So if we were to kind of do the same sort of analysis that we were just doing on oil and saying, okay, here's the stock, it's come down. Where is it likely to go? Like, do you want to play completely neutral? In these cases, I often skew a little bit higher. So I would be more inclined to put a tighter, say I was doing a condor, to put a tighter, closer to the money put spread and a little bit further out on the call spread. And I would look at candles. I would look at this visible range volume profile. So this goes back, we're now looking back to last July. We can see the point of controls around that 123.32. Let's look at that number again. What was this number? What fair value? 123.92. Pretty interesting correlation, isn't it? We see that the fair value is at 123.92 and then we see the point of control being at 123.32. So those are only 60 cents different. When we see NVIDIA down at these bottom areas, then this leads me to believe that we're more than likely going to come back up into this what we consider calling the value range, and very low volume down at the bottom of this candle. If we scroll into a little bit of a more micro position, we'll see that there's even less trading actually happening in here in this range. I'm looking way off to the right and saying, you know, this choppy market that we've experienced, the reason that this moved back up so quickly is because that point of control is up higher. On the recent, the point of control is at 138. So you were asking, could NVIDIA break the 128? Well, my expectation would be that if it does start to see a retracement back up, that 128 is not even in the value range as of recently. So that my guess would be that it would be trading above that relatively quickly because there's low volume here and there's greater volume up here. But again, we can keep analyzing it to death. At some point, you kind of have to make a decision as to what you're doing. So if we were to look just at the last couple of weeks, we can see this is very even trading. The only place where it was really light was right around that 125 level. And we see there's not quite a gap. There's actually very little gaps in here. There's a lot of overlap, but big candles, big moves. I think this is great for swing traders. Not so great for us. If you're trying to trade neutral in this, it's a bit hard. Are you still doing the Roundhill campaign? I was down about 8% at one point. Thanks, John, for letting me know. Thanks for typing 1 in the chat. I appreciate that. I'm always trying to get a few more comments. So whatever I can do to get you guys to like squeeze like a letter in and just like, oh, I'm going to drop a comment. It helps get a few more viewers in the stream, which would be fantastic. I've now been doing this for how many streams? I just looked the other day. It was like, I don't even know, 160 streams or something I've now done. Like, I moved into this house just over 4 years ago, and into this office, and I've been streaming every Tuesday. So it's been great. This has been fantastic. I'm ready for the acceleration of more viewers and lots of questions. So anything you guys can do to comment, that helps me a ton. Mike's asking about the Roundhill campaign, down 8%. There was YBTC, which is YBTC, is that the Roundhill product? Yeah, like right when I posted that video, when did I post it? It's pretty interesting, actually. You know, you talk about being a streamer, being like a YouTuber and putting stuff out and saying, hey, this is what I'm doing. And when you look at when you're looking at these positions, so I bought like a swack of positions on these on January 21st. I was looking at the video January, Wednesday. I put in positions on the 21st, 22nd, and 23rd. I was loading into positions, but it's not been a very good run so far. This is RDT. These are super interesting strategies where they have upside exposure overnight, and then during the day there's 0 DTE covered calls on them. They pay a huge dividend. It's crazy. So this particular fund is $41 right now, marking at 37 bucks right now. 19-cent dividend, 20-cent dividend, 25-cent dividend, and these are weekly. So from the perspective of positions that I purchased here in January, I already received on each share 21 cents, 28 cents, so we're what, 50 cents there, 25, that's 75, 95, and so $1.15 in dividends already in just a month and a bit. Unfortunately, not enough to cover the drawdown that we've incurred. So I have, I'm down about $4 on these positions. If I was buying them around that $41 mark, and they're worth 37 right now, that dollar back in dividend helps, but it's doesn't help against a move to the downside. But this is a direct correlation to the market. So this one, RDTE, is tracking the Russell, and this is big. This has been a big move. So we'll see. The performance on these has been pretty great since inception overall, because the dividend has been pretty decent. So for people that got into it early. One of the things I've been looking at, always kind of trying to figure out where I'm going. Let me pull it up here. That's not what I wanted. Let's close that. Let's close that. Do I have one open here? Yeah, has anybody heard of these guys? One second, I'll drag this over. This I don't really think I've talked about this very much at all. These are Calamos Bitcoin structured alternate protection ETFs, January. If you look at what these guys are doing, it is pretty interesting. So effectively, they are they're purchasing a position that has protection. So in this case, there's 100% protection level on this one, more than when it was entered. It's actually 101%. So the theory with these is that at expiration next January, so these are 1 year long trades that you kind of hold, this ETF should be worth $25, which is what it was entered at. Because these start as 100% hedged. And the reason I was looking at it this week, because I thought, well, what actually happens when the market drops? Like Bitcoin on a hedged fund, you would think there would be a little bit of a drawdown, and there has been. It's very, very slight because it was already 100% hedged. Now there's a max cap, which is 12%, and that means that the maximum return that a trader could make, or a long-term investor could make over the year, is about 12%. That's the max cap. But there's no way for it to actually draw down. Now, if we look at what happened to this during this Bitcoin, it's interesting how it's held its value. And these guys chart this very well. So this is Bitcoin's price going down. And because of the way their product is structured, their ETF is structured, they're actually down very, very little. On a $25 investment, it's still worth $24.73. And there's still 336 days left. What this does is it means that the outcome period cap, that 1 year period cap, is actually increased from people that bought it back on day one. And then they have a new one that comes out every month. And these are interesting little funds. So if you guys are looking for that kind of stuff, if especially these are types of things that I might consider for a retirement portfolio, where you're looking and saying, well, I want some exposure to Bitcoin. I could make up to 12%, but I want to hedge myself and have no risk. And right now, the options, looking at that, we could collect cash flow from just having cash, and we make somewhere between 2.8 and around 4% is pretty typical. Investing in a fund like I just showed you gives us upside potential that's greater than that with zero risk. So it has slightly more risk than a T-bill type position, because those ones are static. You're going to make your 4% over the whole course of the year. Whereas this one, you have the chance of just making nothing. So there's slightly more risk compared to something that has a guaranteed return, but it has a bigger potential return. So I think that these are viable products to look at right now. And actually right now, buying something like this, you actually have guaranteed upside by 25 cents. Not very much, but still you're currently hedged more than 100%. You guys have any questions about that? What do you think of those kind of things? Did you buy gold in the recent dip? I already have my gold positions on. I'm not a huge swing trader. I will post. I do have a friend, Felipe. I'm gonna post. If you guys are interested in swing traders, his service is fantastic. I'll post it right here in the chat. And if you use my link, I get a little bit of a kickback for promoting his stuff. But if Liberty Signal, I've posted it in the chat. If you guys are interested in swing trading, go over and see Felipe. He's an absolute master of what he does, and if anything, go over and just read his manual on how he thinks about swing trading. We as traders, we just have different mentalities. There's a modality where we're looking at, I try to stay invested most of the time, and then I am trying to constantly make a small return, and then Felipe is looking for staying in cash most of the time, and then taking small bets and really making these big wins. And so having outsized wins with small returns and have very, very small drawdowns. So I think that his strategy and my strategy complement each other very, very well. I just haven't traded that style, and I have always been kind of a neutral. Let's buy, let's hold, let's reinvest dividends, let's reinvest our covered call income. Let's not get too stressed out about the market. The market is going to do what it's going to do. We don't know whether it's up or down. We just have to kind of keep our portfolio kind of moving in the best that we can, and it's paid off for me. So I did not buy the gold dip because I already have some pretty good gold positions in. What is the screen that you have up? When were you asking? What did it look like? The heat map? This. Sorry, what did I have? I just have like a browser. This is Trading View. This is just a browser. This is FinViz. This is the heat map over at FinViz, which I think is good to look at. Look at this. Look at everything just pulling back into Qualcomm, Micron, Texas Instrument, AMD, AVGO. So this is all the semiconductors, and I made some pretty heavy adjustments to my semiconductor positions this morning when we were down. So we always have to focus on what is most important. And I appreciate the question about buying the dip. And this morning, what I was doing was I was focusing on those semiconductor positions because again, if we look at this is the current one that you're seeing right now, and this is from this morning, and the writing was on the wall. Intel down 4%, Qualcomm 2%, AMD, AVGO, Nvidia down 8%, Micron. My gut was telling me that with these tariffs and just kind of how the volatility was going to play out, if we saw any rebound, we might see some money flow back in there. And I spent the first hour plus of the day kind of trying to walk through with my patrons over in Discord and what I was doing and how I was adjusting and what I was looking at for the semiconductors, because I have some positions in there that are now doing quite well. because of those adjustments this morning. So we'll hope that we see that money continue. I'm really feeling pretty good about this market in general. I think that hitting that 200-day moving average today was fantastic, and my gut is telling me that we're going to see some upward momentum in some of these. So Mike says, I have such a love-hate relationship with technical analysis. It can be used to make lots of potential trade looks good. Yes, technical analysis is a hard one. There are, like, I'm a firm believer in that people can try to see what they want to see. You are looking at, like, when we look at, let's just look at technical analysis, especially when we talk about like head and shoulder patterns and stuff. These things just repeat all the time. It doesn't matter what we're looking at, and it's kind of the when people look up at the clouds and they say, oh, there's like I see a whale in the clouds. Well, of course, and if you look hard enough, you're gonna see a head and shoulder pattern here. You're going to see that. You're going to see some sort of channel or breakout, or I don't even know. For years, I kind of was like, okay, I don't even like technical analysis. But then you get to a point where you realize that there are enough people looking at it that some technical analysis actually becomes true because the traders and the algorithms are doing it. The thing is to kind of figure out which ones are being looked at. In general, I think that technical analysis on the charts is quite difficult. Whereas tracking the moving averages, looking at point of control, looking at volume, and really looking at volume profiles gives us a better indication as to looking at this chart. So I have had more success with that. And again, playing these ranges, not being too crazy, trying to say, okay, I want to, I'm okay making some money in this range. Like what's wrong with making some money in that range? I don't have to be specifically right all the time. John Lindsay says, yes. Pal says, super happy to hear always from you at Levi Woods. Thank you so much, pal. Appreciate it. When we were discussing NVIDIA, what other ones do we have? I had Investing Pro. I also had this open. This is a paid service if you guys are interested. I also have a link for that if you guys want to sign up. It's hard. I have a couple of free services that I use, free paid services that I use. I will post both of them. So I use both Seeking Alpha and Investing Pro, and they're both good. It's hard if you're not trading enough. We can really get into a cycle of being like, oh, are we paying too much money, like on a monthly basis? Like, what are my weekly, monthly expenses for being a trader? And if you're swing trading and doing a bunch of stuff, maybe that makes a lot of sense. But for most buy and hold investors, it doesn't make a huge amount of sense to be into those positions. It's why I try to do this kind of thing where I allow everybody to come on. If you guys want to see a rating from Investing Pro, just come into the Tuesday stream and ask me. I'm promoting their products for them, and then you get to see a little tidbit of kind of how I use them and how I function with them, and then there's zero cost, and then we all benefit from that. I benefit from you being here, I benefit from your comments, and then Investing Pro benefits from having exposure. And I think I get rid of services that I don't like. So there's been services in the past, if you watch some of my older videos, that I have, and there's been very few that I've promoted and I've looked at and I've used, and then over time it's just like you decide which ones you're going to promote and which ones you're not. And I'm very selective about what I post to you guys, because I don't want to come across as somebody that's just like trying to sell a bunch of services. That's not the point here. We're trying to get to a place where we can make decisions and feel like we're not just alone trading. I think that's the hardest thing. It was one of the hardest things for me, was being a trader that's just sitting and saying, oh, I've got I'm going to be wrong, or because you always focus on the negative things. We always do that. And in fact, we're right most of the time, which is how we trade. We just dwell on the negatives. We have to kind of release that mindset and not think about that. And I think being in a group and being part of a collective helps with that a little bit at least, you know. So hopefully that helps. Yeah, SOXL, the rating is going to be terrible. Jimmy Trader said, you see the chart giving you the middle finger. Yeah, people may feel that way, that sometimes. Absolutely. You know, this is the thing. I don't love drawing on those charts because they always look like something they shouldn't. I saw one the other day that was quite funny. It was like Trump. They had like flipped the chart on the side. It was like Trump's DJT, but it was made to look like him, like a profile of Trump. And I was like, oh, that's kind of cute. I love that kind of stuff. But in general, yeah, the drawings are not that great. We're going to look up SOXL, but it's going to, oh, sorry, I realize you can't see this. It's not going to give us anything because these are semiconductors. So what basically is happening with these is that they're moving up and down. One of the things that's crazy about this, like these are daily, and they actually don't move as much as you think. Like you think, oh man, they move so much, like 56% on the 1 year. Well, if you're to look at, and this is a particularly bad year right now because it's moving down quite a bit. But if we look at Nvidia on the 1 year, we're at 38%. But on the 5 year, Nvidia is up 1680. And that SOXL on the 5 year is not up that much at all. So a lot of these companies that are part of this fund, if we look at that 5 year, 83% for Micron. 1 year, we're looking at just down 2.83%. Micron actually barely moves. That's interesting. You know, this is where these types of things where there's lots of potential volatility in these, this is where those, you know, like a strangle straddle swap can work pretty well. If you wanted to get like long deltas, what you could do is sell two or three, some ratio, sell maybe 3 at the money calls or right around that 92 level, and then buy 3, or just buy 1 more long call than you sell short. So you could do like a 3 to 4 ratio or a 5 to 6 ratio. I typically don't go much further than that. But what that does is it gives you kind of bullish exposure to these. Fair value right now on Micron is 16% above its current value. We can see it's barely moved this year. And there's probably lots of opportunity to the upside. Price point's about right, it's $92. Selling three calls kind of at the money and then buying 4 at a later date, you know, longer than 100 days. Those short duration calls, if they expire weekly, pay way more than the longs cost. And so that's a nice little trade idea for you guys to consider. So that would be selling 3 short duration short calls and buying 4 long duration long calls. You can do it like right at the money, all of them, just like calendars. It's like a diagonalized calendar, but there's 3 shorts and 4 long. That gives you long deltas overall. So, but lots of theta decay. Not a lot of risk. It's just the only risk in that is that you lose whatever money it costs you to enter the trade. So we looked at the rating there on Mike, but on those leverage funds, there isn't. It's really has to do with the underlyings, but they tend to move really quickly on the daily, and then over time, they're a little bit more range bound than you would think. Okay, I'm going to get out of here. It's 11:59. You guys have been fantastic. I will see my patrons on Thursday. I'm going to jump back in the chat room right now. We're going to take a look, see if everything's working all right. We're going to look at some more trade ideas. If you aren't already a patron, head over to patreon.com. Sign up for my free newsletter. You can go to drawbridgefinance.ca as well. Either of those you can get on the free newsletter, and you can check it out. And yeah, want to see you guys back every Tuesday. Thanks for the comments. Thanks for everything. Take care. Let's get rich together. Bye.